Good afternoon, investors and corporate. Welcome to SET Digital Roadshow first quarter of 2023 performance review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15 minutes Q&A. During Q&A, investors may leave your questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. May I now invite PTT Exploration and Production Public Company Limited to start the presentation.
Good afternoon, investors. Thank you for your interest in joining this session with PTTEP. I am Arada from PTTEP IR, and with me today is Kuntanat, our IR manager. Today we will start with a brief update on our latest strategy and key business update, and then we will open for the Q&A. Over to you, Kuntanat.
Thank you, Ms. Arada, and good afternoon again, all the investors. In this quarter, we would like to bring to your attention some of the highlights. Let's start with the E&P business progress. In Thailand, for G1/61/L1, we have entered the site, as you are aware, and now we operate under the PSC from the April 2022. Can you move the slide, please? Q1 highlight. Yes, thank you. Currently, the average gas production is at around 210 million scf per day. In this year, actually in last year, the project we have drilled more than 77 production wells and also install about 8 wellhead platforms. We expect to ramp up the volume to 400 million scf per day by the middle of this year, and up to 600 million scf per day by year end. The final production ramp up to 800 million scf per day should be achieved by April next year. Elsewhere in Thailand, we have won new 2 blocks in the latest Gulf of Thailand bidding, namely G1/65 and G3/65. We have actually signed the PSC contract with the government about May 30th. Both are the exploration blocks, but their locations are close to the G1/61 and G2/61. We believe there are petroleum potential in these new blocks. However, after the signing of the contract, we will start with the exploration phase. Going on to Malaysia, a key project in Malaysia is SK410B, which is still in the progress of concluding the studies related in order to make the final investment decision within the end of this year. Also in Malaysia, we have been awarded a new block SK325 from the Malaysian bid round 2022 with about 32.5% stake in this block. This project is also an exploration project, and the location is actually close to the SK410B Langlaba that I just mentioned. In UAE, we now focusing on the offshore 2 project, where there is a possibility to speed up the development of this project with Eni, which is the operator. For this block, we previously announced the discovery of gas reserve about 2 TCF. In the rest of the world, in Algeria, project Hassi Barages currently producing at around 14 kbpd, and we aim to increase the production to 17 kbpd in this year. In Mozambique, which is still under the force majeure, the timeline to resume the construction on site is still pending for the local situation. You might heard from the news that there is a good development in the country regarding the security situation, and the operator of this project, Total, which all the partners are in discussion for the plan to resume all the work, as well as discussion with the contractors. At this stage, the first LNG cargo target in our estimation is around 2027. Moving on to the decarbonization effort of PTTEP. As of the first quarter, we managed to reduce around 1.7 million ton CO2 from the base year 2020. On the CCS project at Artit, it's still under FEED, the front-end engineering design study process, aiming for FID within this year as well, with the capacity of around 700 to 1 million ton CO2 equivalent per year. There is also progress in the solar S1 project around about 10 megawatt solar farm, which we hope that the COD could commence also in the middle of this year. Continue with the other greenhouse gas reduction initiatives. For example, the flare gas recovery unit, the projects around energy efficiency. And we also start building the offset portfolio from the reforestation and also our blue carbon project. In the progress of the Beyond E&P business, we have progress in the green e-methanol project. We expect that the study results should be able to finalize this year. And then there's a further possibility to construct the e-methanol plant in Singapore. This is subject to further conclusion. We also continue to working on the CCS as a service in the Gulf of Thailand. And there is also some progress under ARV as well. Next, on the greenhouse gas reduction roadmap, I would like to highlight a few key points that for PTTEP, the roadmap to reduce the greenhouse gas reduction is framed under the EP Net Zero, where E is the exploring for lower carbon E&P portfolio. We apply greenhouse gas reduction criteria in our new investment decision throughout the E&P value chain. We also partner up with companies whose decarbonization pathway align with us. And furthermore, we strive for the strategic balance between the production and the greenhouse gas emission to sustain the greenhouse gas reduction. On the P side is the production and planet imbalance. On the production side, we continue to pursue the development of technology to reduce the greenhouse gas emission from our production process. And we also moving forward with a zero routine flare for new projects by using technology to recover and utilize the flare gas. We also apply carbon capture utilization storage or CCUS, which we expect to significantly reduce greenhouse gas reduction emission as well. On another hand, we have enhanced digitalization in our operation and maximize the use of renewable energy such as solar and wind on the platform, for example. On the planet imbalance, we focus on the emission offsetting through reforestation and mangrove, including the blue carbon project to increase the natural carbon sink. We manage carbon credit with minimum risk of controversy and leave no footprint in the country where we operate. From this chart, you can see that on the blue chart, we expect to reduce a certain amount of CO2 equivalent each year in order to reach our greenhouse gas reduction net zero target by 2050. And the majority of this reduction would come from the CCS, as well as the energy efficiency and also the renewable side. In the lower part of this chart on the green one, this is the offset portfolio that we are trying to build up, and we will use this to offset the remaining CO2 by the year 2050 in order to achieve the net zero target. Now over to Khun Narada, please, on the financial result of the first quarter.
Thank you, Khun Thanan. So I will briefly touch on the first quarter result and the financial position as well as the financial guidance for the remaining of the year. So on the net profit of Q1 this year, the net profit increased for about 36% compared to Q4 last year, and this is driven by the significantly lower non-operating losses. As in Q4 last year, we have booked the impairment loss from Mozambique project for about $190 million, as well as the other recognition on G&A expense from the Montara mediation settlement, about $130 million in the fourth quarter last year, while in this quarter we reported only the oil price hedging gain of $1 million. On the normal operating profit, the profit decreased for about 18% Q-on-Q, and this was driven by lower sales volume and average selling price compared to the fourth quarter of last year. On the unit cost, for Q1 this year, the unit cost declined for about $3 compared to the fourth quarter, or 11%, and this was due to the lower DD&A and G&A expense, because in Q4 of every year, normally we will have the cost actualization as it is the year-end financial statement closing. On the year-on-year front, we reported significantly higher net profit of about 80% increase, and this is from both of the operating profit and non-operating profit. On the operating profit, it increased for about 4% year-on-year, and this is because the higher sales volume and lower unit cost. Higher sales volume were driven from the addition of T161 projects, which the project startup was in April 2022, and G261 project was beginning the PSC in this year as well. For the average selling price, the result year-on-year decreased a bit, about 3%, and this was due to the lower liquid price offset with higher gas price. On the unit cost, we reported lower DD&A and royalty expense and higher OPEX. For the non-operating items year-on-year, last year we reported the oil price hedging loss of about $240 million, while in this year we reported a gain. Next, on the sales volume and price. So compared Q1 this year with Q4 last year, sales volume dropped for about 8%, and the majority decline was from the project in the Gulf of Thailand and Malaysia. And the key reason is that there was low nomination from the gas buyer during the first quarter of this year due to the buyer's LNG stock management. And in Southeast Asia, we have the unplanned shutdown at Malaysia Sabah Edge projects due to the technical issues with the floating storage of takers of the buyer. Therefore, Sabah Edge has to suspend its production for about a month in the first quarter, but the project has already resumed its production since the beginning of March. So we expect that the production of Sabah Edge will continue as usual in the second quarter. And another reason for sales volume decrease was from Oman Block 61 project. if in the bar chart, gray area of the bar chart, sales volume declined for about 14 kboed, and this was because the lower cost recovery of Oman Block 61 project year on year. Despite the unchanged production volume, but under the PSC, as the cost recovery balance of this project is already used up. Therefore, the sales volume entitlement that PTTEP can report is significantly lower than previous years. Next, on this selling price, our gas price in the first quarter compared to the fourth quarter has a little bit declined from 6.7 to 6.5. And this is because from the lower the price adjustment of key projects such as Myanmar, as well as the start of G261 or Bongkot PSC in early March, which the price is lower than in previous Bongkot concession. For liquid price, the price for Q1 decreased for about 9% compared to Q4 last year, and this is following to the global liquid price. Normally, our liquid selling price track to global Dubai price with a discount about $2 per barrel. And for the gas and liquid mix, so our gas mix was about 72% in the first quarter compared to Q4 last year. This was unchanged. And for the revenue mix, the gas is about 55 to 56%. Next, on the unit cost. So in the first quarter, the unit cost declined from the fourth quarter for about 11% or $3. And this was because the lower DD&A and G&A expense offset with higher finance costs. So for the lower DD&A, this was because the lower decom liability of Bongkot projects on the wells that was transferred to G2 PSC. And for G&A expense in Q4, we had been recognized the one-time adjustment of the cost realization. So the G&A in Q4 is normally will be high compared to the other quarters of the year. Next, on the financial position and cash flow, for the 3 months of this year, we reported the cash flow from operation net of tax at about $1.5 billion, and the capex investment outflow is about $660 million. So this resulted in the ending cash at the end of the first quarter at $4.2 billion. So this amount of cash will be declined in the second quarter because we have key major outflow in the second quarter, which is the dividend payment, as well as the annual tax payment of Thai projects. For the financial position, at the end of the first quarter, we reported total asset of about $25 billion, and the majority of our asset was absolutely in Thailand and Southeast Asia. For the interest-bearing debt at the end of the first quarter, it was reported at $3.8 billion, with the debt-to-equity ratio at 0.27 times, and this is far below our policy at 0.5. And our average cost of debt is about 4% as at the end of the first quarter, and our debt is in the 100% fixed rate. So the increasing market interest rate has no impact to our average cost of debt at the moment. And the average loan life of our debt is about 15 years. Next, on the financial guidance for the second quarter and the entire 2023. So the first key driver is the sales volume. We expect Q2 sales volume to be 437 kBOED, and this is 24K lower than in the first quarter. And the majority of the lower sales volume was from the transition of Bongkot concession into PSC, into G2 PSC, which under the PSC condition, that would be a part of the government take. Therefore, the sales volume that PTTEP can report will be lower under the change from the concession into the PSC, but PTTEP will be reporting lower costs as well, because under the PSC regime, the royalty expense was net off from the sales volume. And for the full year 2023, we expect the sales volume to be 456 kBOED, which is 12K lower than the actual reported sales volume of the year 22. And this was mainly because the decline in Oman Block 61 sales volume entitlement offset with the increase in the sales volume from Thai project. As during this year, as Khun Thanat mentioned, we will ramp up G161 production. So for this year, we expect the sales volume from G161 to increase from the year 22 for about 22 kBOED, offset with a decline in Bongkot concession change into PSC. So we will be reporting a higher sales volume from Thailand for about 10 kBOED. Offset with lower sales volume entitlement from Oman Block 61, we end up having lower sales volume for about 12K. On the gas price, we expect the gas price for the second quarter to be about $5.9 per MMBTU, and this is about 60 cents lower than what had been reported in the first quarter, mainly from higher PSC contribution, as G261 was fully been under the PSC since early of March, and the selling price for Bongkot under this G261 PSC is significantly lower than in the previous Bongkot concession. As well as in the second quarter of this year, it was that would be the price adjustment of the key gas sales agreement for projects in the Gulf of Thailand, which would be reflect the declining global oil price for the second half of last year until the early of this year. And for the entire 2023, we expect the gas price to be $6 per MMBTU, which is 30 cents lower than what had been reported in the year 2022, mainly from higher PSC contribution as mentioned. And for the unit cost for this year, we expect it to be around $27 to $28 per BOE, which is lower than the unit cost of the year 22. This is due to the higher contribution from PSC projects, which the royalty expense would be lower because it was already net off from the sales volume entitlement that PTTEP is reporting under for G1 and G2 PSC. and we expect to still maintain the profitability of EBITDA margin at 70 to 75% throughout this year. This is largely unchanged from the year 2022, and our financial guidance on this page is based on the average Dubai price for the entire 2023 at about $75 to $80 per barrel. So that was the end of the presentations.
The session has come to the end. Thank you very much, investors and corporate, for joining the conference. If you do need further detail, please feel free to drop us an email. Thank you very much. ขอบคุณนะครับ
Thank you